Okay, so I'm just going to start now pretty much. And so I'm just going to always, like, I'm just going to go from top bottom really. So first of all, just looking at the Bitcoin chart, it seems that we've been in this somewhat like a compression, right? I mean, it's obvious. We've been in this push up, compression. And of course, markets move from periods of contraction to expansion, right? And so the greater the period of contraction, very often, the greater the period of expansion, right? And so that's just common. It's just common understanding, right? And so the thing about the situation is that it can break to the upside or the downside. You just never know. It could be some kind of course, pennant, right? I actually made the right move, I think. I was quite vocal about this as well, because on Saturday, and specifically, we had this push up here on Friday and the liquidity grab here. I don't actually like trading on Saturday, so I've been doing a lot of statistics as well. And what I've actually found is that the 1 hour confidence trend in the MDX algo is actually less reliable on certain times. And what I found is the 1 hour confidence trend is less reliable on Saturdays. And also, if you're interested in day trading, I've actually noticed that the win rate for the 1 hour confidence trend is actually a lot higher half an hour after the US Open. I mean, of course, that's speaking from a day trading point of view, right? And so, obviously, if you're a swing trader, it's not as relevant to you. And so, what my general rationale was is that, so specifically we had this push up on Friday, push down, and here, and of course we had this liquidity grab here. But then when I saw this, I thought, okay, this is potentially some kind of SR flip, right? And so of course this was a peak here, push down, push up, retracement, right? And it's an interesting retracement because it definitely keeps people who are shorted here underwater, but at the same time it makes people who've entered good longs just go break even quite early, and so naturally they're getting stopped early and the market goes ahead, right? And so this is very common understanding in market makers. People always forget this. Market makers not only try to screw retail over, but it also targets people who bring the stop losses to break even as well. I've noticed as well. So once I saw this liquidity grab, so my kind of general style of trading is now moved away from support and resistance. I realize that now it doesn't really work anymore. It's very retail thinking. I'm more thinking, okay, well, where's the liquidity being targeted? And of course, a lot of people are thinking that, right? And so once this liquidity was taken, and then I entered my long position here, and then of course we had this push up here, but then there's just been so much choppiness. I took my first take profit at 28.2. And then recently, I mean, I put in the group chat today, I've taken out a couple more as well, and I'm letting 40% of my longs run. So I entered around here, so I averaged between 26,990 and 27,100. And so I had two longs and two separate accounts. I've taken my first take profit around, or both of them, around 28,230. Then the last one today, I posted in the group chat, I've taken a good chunk out at 28,330ish and 28,400, because the problem is that obviously this is quite choppy, but the issue now is that this could be, of course, in the 4 RNO we are in, of course, in an uptrend. It is a trending market, right? It doesn't take a genius to work out as a trending market, but it seems now, I mean, obviously it could be a bit premature. This could be some kind of new range, right? We do have some kind of, of course we've got this peak here, push down, and the liquidity grab over here. What I've actually noticed, so my favorite style of trading is false breaks, but now I've really shifted away from, I want now at least 2 touches now. And of course that means that my general availability of trades will greatly decrease, but it just means that my win rate will be a lot higher. And also whenever we're in an uptrend, okay, I generally like to trade, I mean, a lot of you people call it swing failure pattern. I mean, obviously people use different terms like swing failure pattern, false breaks, liquidity grabs, etc., etc. But whenever we're in a trending market, I have more preference towards trading false breaks from the downside to the upside, if you get what I mean. So if I'm trading it counter trend, I want at least 2 touches. So now we've got one false break here. It's a very simple typical liquidity grab, but I'm not entered a short yet because there's no liquidity being grabbed yet. And so if I was to get a push up and a retracement, then of course, I might consider that, right? And so I'm just going to, of course, draw a fixed range, of course, here as well. I mean, of course, you could argue it's not actually a range yet, right? But it does seem the beginning of some kind of mini range, I think it's fair to say. So I'm going to just draw it roughly from here. And yeah, I mean, as we've noticed today, so there was kind of method towards the madness, right? There's a reason why I actually took profit around here. So I mean, obviously took my longs around here because I suspected that this could be some kind of range. And so so anyone who's not familiar, price generally gravitates towards area, of course, of high volume, right? And so statistically, whenever you gain, so this is the value area low and this is the value area high. And statistically, whenever you gain acceptance into a value area low, there's an 80% probability of a rotation to the value area high. And it's not, I mean, obviously it's not 100% the case, but you would of course combine it with things like Fibonacci as well. But we regained this value area high, low, and we rotated here, and we bounced off here, and then we went above. And so me personally, I never really liked. I mean, of course you can. An option, of course, is to wait for a push up and grab this liquidity, and then go for a short. And of course, the riskier short, of course, is push up, push down, and then a retest of this value area high, and you can take one take profit potentially at a point of control. Just to take your initial risk out of the trade, right? And the next take profit you might want to take around here, and you can leave like the last 30% to run. And I think the ideal situation, of course, is I like to have long and short exposure at any given time. I don't really like to have just unidirectional exposure. So, for example, I've entered longs here, right? So it would be nice to have a hedge long here and a hedge short here. And then once you've kind of taken out the initial take profit, it's just like a risk-free trade, right? And so this is the mini range currently right now. Looking at more macro picture, really speaking, I mean, I don't know if anyone else was here around last year, but specifically around here, there's very little here structure. We spoke about this yesterday. There's a bit of revision because a lot of new faces, but we have this dump here. There's very little structure. And of course, we've been having this similar fractal, right? If you were here last year, the same kind of fractal over and over again, rinse and repeat. Dump, bear flag, dump, right? And then bear flag, dump, right? And then bear flag, dump. So it's just over and over again, right? But specifically looking at this 30K region, I mean, I don't mean to be a moon boy, right? Like, I really don't. And I mean, as traders, I think one of the beautiful things with being a trader is that you're less likely to have a bias in the sense that you can benefit in either direction, right? You can benefit in either direction. The price does not have to go up for you to benefit. The problem with people only, specifically moon boys who just own spot, is that they only benefit when the market goes up, and so naturally they're more inclined, I find, to generally be bull biased. I'm sure sometimes you could agree, right? So sometimes to the extent that they just disillusionize, right? So looking at this particular range, looking at a snapshot of this range, I talked about this yesterday, just revision, obviously. So we fell down here. I'm going to drop from here because this is where we held support, and then we broke down around here. So I'm going to put it around here. So naturally, this is a scenario. I mean, very little. This the value area low around here is around 28.9K. The point of control is around 30K, and naturally 30.8K is, of course, a value area high as well in this region. And so, I mean, a potential scenario is that this is the kind of situation that I would like. I mean, I would love a liquidity grab of the 28.5 and then short that as a head short. A potential situation, of course, could be we get a push up like this and reject of this value area low, so 28.9, and then push back down, right? That's scenario one. Then the next scenario, of course, is, which I'm not as interested in, is the problem is that if we push up and we get acceptance, right, and we kind of find support around this 28.8 region, the problem is that there's very little in the way till this next high. And so this is kind of another no man's land, I think. So I don't really want to be trading the center of this range. I really don't want to. I mean, obviously the short of the century would, of course, be if we get some kind of a push up, right, and then take out the liquidity here, naturally, right? So if you go up like this, false break, grabs liquidity and then dump to new lows, that would just be amazing as a head short. And you could probably hold that for a lot longer. It's funny because I shorted Bitcoin from 30K to 19K last year, and I just think, like, if I just held it till now, then I'm kind of back to break even, right? But it's just, I mean, that is one scenario. I mean, obviously we can dump right now. I mean, I'm sure a lot of you have appreciated a certain fractal playing out, specifically if you notice. So going on the 1 hour, I mean, it seems like some kind of compression. We agreed. So in particular, it does seem like, I mean, naturally the FOMC meeting will greatly dictate things as well, right? But it does seem like some kind of, so push up. So I'm going to use this indicator to highlight the point. So before yesterday, so ignore that, it was some kind of, so a lot of people are thinking it, so we pretends like some kind of some kind of compression, like push up, compressing, and eventually we had this lower high. Of course, the structure was not confirmed until we actually took out the higher low, right? So then it was confirmed around like very late at night, and then it was fully confirmed, of course, in the morning. But now we've kind of taken out the structure as well. But the thing is, this could be some kind of stop hunt before new lows. But the thing is, why I've not actually open any hedge short or anything is that this kind of concerns me a bit, because naturally whenever you're having shorts, right, whenever you're having a dump, you naturally want to see certain CVD divergences, and naturally you want to see, specifically when the longer short ratio, so this is 0.41, this represents retail, and so retail are only 0.41 net long, okay? So that's like one of the highest net shorts I've seen in a really, really long time. And it just shows how delusional the space is, right? So I think it was roughly, I mean, not like less than literally 10 days ago, we were around like 0.7. And all of a sudden, it's 0.4, right? So it's just crazy. But it's crazy, right, how this space just is so delusional. And so I'm a bit hesitant to, obviously we can dump right now, but it's just, this doesn't, to me, fit the typical picture of a dump. I mean, I would like at least a 0.5, 0.6 dump, right? But, I mean, obviously, this is one aspect, right? But the thing is that, I mean, it's good. I mean, it is good to see, though, in some sense. Yeah, Thumbcase is saying as well, it's a lot of shorts. I mean, you have to also appreciate Thumbcase that this is obviously, it changes so much as well. I mean, obviously, this is the last day. You know, you don't know, right? I mean, obviously, I mean, of course, right? But a lot can change in a day, as we've noticed in this crypto space, right? But no, for sure. But if you look at open interest, particularly, so from 3 p.m. to the open interest has been increasing, okay? And the retail shorts have also been increasing as well. Because naturally, if this is decreasing, that means that retail shorts are increasing, right? Naturally, because, yeah. But it seems that this recent run-up has liquidated a few shorts, but nothing crazy. Like, I would like open interest to go down around here. It seems that so this is the top traders. The top traders have been quite stealthy. I mean, they've naturally been longing up to here, and there's been a bit of a divergence, obviously, but now they've started to slightly close a lot of long positions. So, I mean, but there's still overall net long, but nothing crazy. And of course, so, I mean, I suspect the FOMC meeting will greatly dictate certain things as well. This is something else that I look at as well. So obviously crypto is very much retail driven, right? Generally, the standard of traders in the stock market is a lot better than the standard of traders in crypto. I think a lot of people agree with that. And of course, naturally, crypto would generally tend to attract a cohort of people that are very risk averse, right? And so based on looking at the leverage habits of really degen people, you can greatly predict certain bounce regions. This is something I look at. It's called margin pressure levels. And based on leverage, so specifically the leverage of certain retail traders, you can roughly predict bounce regions, okay? And so looking at specifically at the FTX dump. So let's look at the FTX dump. So way back, I actually called that we would bounce near 16.1. I was a bit off, to be fair. I mean, it wasn't perfect, right? But, you know, it's fair enough, right? So what does margin pressure level mean? And so the margin pressure levels that I really look at is, generally speaking, the 3x, the 2x, and the 1x. And what it means is that you can short Bitcoin on 3x leverage and hide a liquidation point above the recent local high over here. So it's crazy, right? A lot of degens would often short Bitcoin all the way here, and then they would just put their liquidation point above the recent local low. So they would really be hoping to catch like a home run trade to the next local low, and they would just want to be able to hold it. And so up to this point is the 3x short margin pressure level. So this is the point which you can short Bitcoin in 3x leverage and hide a liquidation point above this recent local low before the FTX dump. And at this point, 14K was obviously the 2x margin pressure level. This is the point which you can short Bitcoin up to 2x leverage and hide a liquidation point above this recent local high. I mean, of course, there's some confluence here because naturally 13.9K was the 2019 high, right? And the next thing, 10K as well. So I mean, 10K is a rough level. It's not a crazy level, but yeah, I mean, this is the 1x. So you can, up to here, you can short Bitcoin at 1x leverage and high liquidation point, the recent local high. So now looking at the longs, right? So looking at the longs, taking it from the low. Yeah, so I mean, this has pretty much been covered. For all the people that have captured longs from 16.8K, we were pretty much closing. I mean, I spoke on my stream, so I was closing a big chunk around 23.2K because beyond that, it was a pretty key level. And of course, when you do the same thing, it does seem that 30.9K is a 2x long margin pressure level. And so that means that you can actually go up to, so you can long Bitcoin up to 2x leverage and hide a liquidation point above this recent local low. And so that's just something interesting to look at. So there's a bit of confluence, of course. I mentioned earlier that it was that value area high, that I pointed out before in the previous chart. So I mean, I'm not saying it has to happen now, right? And the thing is that it's never going to be a straight path, right? Like, a lot of YouTubers would naturally be like, well, Bitcoin's going to 28K, it's going to 28K. They'll probably say the same thing every single week for the last year, right? And so it's that expression that a broken clock is still right twice a day, right? And so the problem is that you can never know when it's going to happen. And if you think about it, right? So whenever we have this dump here, it was never obvious. It was quite crazy, right? I mean, and congratulations to everybody that caught the long. I personally would not have longed here. I thought it was a bit risky. I would have personally waited for a push up and then potentially long this retest here, right? For me, that was a safer play. But if you caught it here, fair enough. It would have made sense that you caught it there as well. In some sense, we've spoke about this so many times. So what is this Gaussian channel? I mean, it's not. Some people care, some people don't, right? So very often when you have a Gaussian channel, and this is you have a limited data set. So this is based on data sets of the last 5-6 times. It's a very limited sample size, right? And so sometimes what you have is when Bitcoin transitions from a bull market to a bear market, sometimes you initially have a push up and you have an initial rejection, and then you go back to the median band, and then you have basically a free pass. Okay, statistically, and I've actually measured all of them, all 6. Okay, I've measured all of them. So once Bitcoin has a run up like this, rejects off the median band, and then goes to the lower band, and then pushes up, sometimes you get a retest at the lower band, and so the lower band currently is around 26.5k roughly, 26.4k. But once it pushes up and then retests the upper band, what happens is that across the last 5 times you have a 30 to 40% rally, and that does put Bitcoin actually around 32k. But the thing is that implies, obviously nothing happens in a straight line, right? But, nothing happens in a straight line. So, naturally, right? So whenever in last week specifically, a lot of us caught the beautiful short from here. 26.5k was a nice short we all caught. But the thing is, you have to remember, this is also a 5-day chart as well. This chart hasn't closed yet. And so could we see a pullback to 26.5k? Absolutely. It's not out of the realm of possibility, but this is just something I'm considering. Of course, some people take it seriously, some people don't, but it's just, it's just something interesting to look at. And of course, if you're looking at the bigger chart, I brought this up yesterday as well. And you have to always be careful not to short too aggressively as well, because to the people that was here yesterday, I did bring this up, but I'm going to point this up again. I think it's very much relevant. And so people always forget, of course, this is the 12-month chart, and so naturally 13.9k was the 2019 high, and of course 16.5k was the 2022 low, and naturally 16.6k was the 2023 open, right? Now this is more interesting. So 27.7k is obviously a key level because that was the 2021 low, right? And so I was very hesitant to short there. I was actually more interested in longs, but so it was a bit risky earlier today, or yesterday, sorry. Then naturally 28.9k was the 2021 low. So these are obviously certain key levels. Whenever you have technical analysis, you always have to give higher priority from higher levels. You need to work yourself down, right? You need to work your way down, right? And so, for example, if you're at a weekly level, and if the MDX algo is saying short on it, then you're less likely to take it because it could be a major level of support, right? So something to consider. So this is obviously a very difficult situation. So far we've had, it's interesting to see how we have reacted across this level. Really speaking, as you can see, it is we've had some deviations here and here and here, but it seems it'd be interesting if we get this kind of range bound nature. That's not something I'm completely ruling out, to be honest. Just for people who are just weren't here yesterday, again, I appreciate that I went over yesterday, but of course we have that monthly level as well to be wary of. Obviously it's the same month, so naturally the monthly level hasn't changed that much because we haven't changed months yet. So so monthly open 23.1k roughly, and naturally 25k is obviously, we had a doji here, so of course this was a level I'm looking at. Naturally the weekly level around here, 26.5k, it was a weekly level, and of course it was in this dump here, it was actually the weekly closure and also the weekly open here. So that's just something else I'm looking at as well. In terms of daily levels, it hasn't significantly changed. Particularly we've had pretty much a run up, but the only daily level to have, I don't take it too seriously, to be honest. 26.9k, we had a push up, and then we found some kind of support in the push up again. So that's it really. Apart from that, nothing too crazy, to be honest. But these are the key levels. Yeah, it is a trending market, of course. Still, we have to agree that it is trending. But my thought process now is kind of, do we form some kind of mini range? And particularly, obviously this is the 1 hour chart, so obviously it's not as strong as a 4 or a daily, right? And so I'd be curious if we form a new range, particularly between, around these lows between 26.9 to this peak here, 28.5. The way I would more like to play this is that I want to maintain long and short exposure. So, for example, if I have my long here. Yes, I've taken 60% out, but I'm holding on to the net run. I'm holding on to the rest because at the end of the day, you don't know. Like very often, it can be that last 25% runner in your trades that can greatly move you up to the next level in the trading portfolio, in the trading career, right? And so I've maintained that, and it would be nice to get some kind of liquidity grab at least like this, and then a dump. But up till now, I'm not really trading this because this to me just doesn't. Yes, we can dump, right? We've got the FOMC, and of course things can change, but it would be nice to see at least some kind of more trap longs, really speaking. So that's something I'm looking at. Going back to this, actually, of course I brought this down here, but the thing is, I want to now bring it from here to this recent local low over here. So if I bring it from here, yeah, okay. So this is okay. So from the more recent local low around 11th of March, this is the margin pressure levels. Okay, I mean that's a bit. I mean 30k is a bit moon boyish, right? It'd be interesting though, that, right? If we went to 30k or 40k, 30 and 40k specifically are such psychological numbers, right? Because 30k is a point in which moon boys, who haven't been buying crypto, will be really difficult situation. It's the point in which they will think, well, if I don't buy now, it's just too late, and we could be the new bull cycle, right? But naturally, markets don't just go from a bull cycle to a bear cycle to a bull market. Again, it's not as quick as that, right? There's of course a bull market, there's a bear market, then there's natural sideways consolidation, and so it takes obviously a while for greed to build up. And so, yeah, I mean, 29.4K seems to be an interesting margin pressure level as well. So you can long Bitcoin on 3x leverage up till there, and you can hide a liquidation point above the recent local low. And that's just something else I'm looking at as well. Something else, of course, naturally, we talked about this yesterday as well, but why did I take, naturally, my first take profit at 28.23? Because naturally, of course, a lot of moon boys will be looking at this as well, right? But this was a cycle peak. I mean, obviously, this was a deviation play. But I mean, naturally, drawing a fib from the peak. Honestly, I have no hopium for you, but this is as hopium as I'm going to get for you. I'm very much a realist. Like, you know, I mean, naturally, we expected some kind of reaction, right? It's fairly obvious. It's a 236 from the local high, so around 28k roughly. I mean, do we get to 42k? I mean, I don't know. I mean, maybe, but I mean, I'm not going to get ahead of myself. Maybe. So I'm going to draw another fib, actually. I'm going to draw a fib from, let me get rid of this. Yeah, so I'm going to draw a fib from this area. So this is the 32k. So if I draw a fib from here, I'm curious where we get to. Okay, so this is 32k. This is the local low. So in terms of this fib, we're actually getting near the 786, which is interesting. So, I mean, the question is, do we actually get there? Maybe, but I mean, we haven't touched it yet, but it does seem like we're heading there. But honestly, at this point, anything can happen. Like, we just don't know what the FOMC is happening. So, I mean, if you're in no situation right now, I definitely would not recommend. I definitely would not recommend FOMOing longs. I definitely would not. Like, your real opportunity was, I mean, the real opportunity I feel was here after this liquidity grab, or maybe potentially here as well, but obviously the risk is increasing here. But, you know, it was really here and here, to be honest. And at this point, I honestly think just do nothing if you don't have any exposure. It's just very much a no man's land situation. Anything between here to here, like here, is really no man's land, I think. And if you can kind of wait for a break of this liquidity grab, you might be able to get a short. And what I do is that if you get that short, what I would recommend is don't get rid of all of it, right? Don't just trim some, right? Maybe take 40% off. What you could do is potentially, so if I draw the volume, right? So if I draw the volume, fixed volume, so this was pushed up here, return. Okay, so if I draw it from roughly here. Yeah, so maybe if you got a head short, maybe trim like 40-50% off around this value area low, and maybe around this low if you can. And then if we do get a false break, if we dump down and we get some kind of false break like this, and then we get some kind of acceptance back into the value area low, then we could probably open a hedge long potentially. That's the situation. Because sometimes, you might not realize all your gains, but sometimes you might get that huge run up in the last 30%, right? That could really change your, trading career, right? I'm not convinced we've had it yet. So of course it's very subjective, right? Depends what chart you're looking at as well. Because sometimes there's a huge difference. Obviously the USD situation, but in this Bybit chart, it doesn't really seem like there's been a particular. I'm not too, I'm not too convinced this is a liquidity grab. I mean, this is the peak here is around 28,570 roughly. So this peak is around 28,500. So I'm just curious. Wait, let me check something. So is this some kind of fib? Is this some kind of Fibonacci? Okay, so it's roughly gone to the 886. So yeah. We'll just have to wait and see, really. But yeah, I'm in no short yet, but I think this picture greatly is really further supporting my case. Like I might miss it and we could dump, but that's fine. Like I'm not gonna. So the way hedging works is that like I generally prefer taking short positions in derivatives than long positions, because obviously short positions are generally protecting your spot portfolio, right? And for example, if you have a lot of spot crypto, then you need to kind of really be good at shorting, because shorting is specifically your hedge, right? Because if you think about it, right, when Bitcoin was dumping last year, only shorting was really your only kind of making of gains, right? When the Bitcoin was dumping, and so that's why I'm more in trading. I'm generally more inclined to short, but I obviously right now I'm in no shorts. I'm only in longs, but to me, it doesn't really fit the typical picture of a short yet. I mean, of course we can dump, right? I could completely be wrong, right? And that's why I have taken profit. I've taken 60. So for me, my longs are risk-free trades. I've taken 60% out, and so it's a risk-free trade. And so I think that's also my thumb case, to make myself a bit clearer. One of the reasons why, three reasons, right? Number one, I'm not convinced we've had a clear liquidity grab. Number two, my long exposure trades, the initial risk is already out. I've taken 60% out, and I've already achieved like a 1 to 4, 1 to 5 risk score ratio trade, and so it's a free trade, really. And number three is just this picture. Of course, I need to check the AXA charts, and of course you want to check you want to check, of course, the CVD divergences on Barton's all volume, and you can look at order flow and all these things as well if you're into that thing. It's not, you don't have to, but it's up to you, really. But yeah, guys, that's everything I really have to talk about really in the short 45-minute update.